Good morning, everyone, to Market Insights. This is Landmark Title's monthly webinar. We bring to you the first Thursday of the month at 9:30, where we talk about the stats, the facts, the figures, and we dive into why they are like this and what is going on in our market. We are joined with Scott Kiburz. He is the ARMLS Specialist. He knows these facts and these stats inside and out. So we are very lucky to have him on today. Scott, take it away. I know we've got a full day.
Good morning and happy Thursday, everybody. Let's start with the fast facts. What's happening out of the gate? On the first of the month, when we built this particular graph here, we had 3,308 active listings in all of Maricopa County. A couple data points that's noteworthy is we had 187 condos and 186 townhomes, 186 condos, and modular homes were at 222. We actually had more manufactured homes for sale than any one group of condo or townhome. Our market is low. In fact, since the first, we're on the third, that number has come all the way down to 3125-ish this morning. So we burned off another 180 homes, give or take. We sold in the month of February 6,563 homes. Our absorption rate at the time of this printing was 156%, but that's even moved a little bit more. We're closer to 175, 180 as we speak. We're down to 0.52 months of inventory, all properties combined. Coming soon, we're at 632, which, ladies and gentlemen, works out to around 18 to 20% of our market. So as a realtor, if you're listing or buying, please check coming soon. It's paramount. That is a big percent of our business, even though it's only 632 doors at this time. We have a lot of movement in interest rates. We had a bond market specialist in our office on Tuesday. There is a hint that the Fed will raise interest rates 5, 6, 7 times between now and July. That's a big amount of movement, large amount of movement. We do have some inflation happening. We have a war happening, and the Fed is going to be watching our interest rates closely on that. And we surged all the way up to $560,898 average sale price in all of Maricopa County. Those are the fast facts, ladies and gentlemen. Let's dig deeper into the meanings behind that. And Sarah, if you'll advance the page, we'll begin. So, ladies and gentlemen, I'm a fan of a guy named John Burns. This is his book he wrote in 2016-17 called The Big Shifts Ahead. And on page 73 in his book, he has the 4 big influences. Government, economy, technology, and societal shifts. I put those 4 there on the slide. If we pause for 1 minute, ladies and gentlemen, and we look at what's happening with our government, our politics, are they having influence on our lives, on our real estate world, on our nation and our global world? They are. Our economy is in the same situation. We're thriving. We are a booming economy. Technology. Ladies and gentlemen, it's a known fact that there is $175 billion, $175 billion of property technology investment in and around real estate and every aspect of real estate. That is a massive amount of money being put into this segment of our industry. It's a unique point in time, and it's going to cause disruption, change, advancement, reduce friction, and provide different ways for revenue to be gleaned from a real estate transaction. Basic 101 real estate transaction, ladies and gentlemen, for every house sold in Maricopa County, it generates approximately $80,000 worth of economic revenue into our county. For every home sold, about $80,000. Societal shifts, ladies and gentlemen, the pandemic has caused tremendous societal shifts. We also are looking at a lot of next gen type homes or multiple generations of family living under one roof. All of these big influences that John Burns wrote about in 2016-17 are alive and well and thriving at a different velocity frequency today than I think you ever imagined. Thus, we have disruption. Sarah, move forward. Part about disruption and pricing. This is a great graph done by the Information Market. Information Market's owned by Arizona Regional MLS. And just this is a great visual of the year 2011 and homes in dark blue under 200,000, and how homes now under 200,000 have gone from, it's about 75% of our homes were that price, to now it's less than 10. It's closer to 5.7 of pricing of homes at that price point. As we move across the page and we get to 2011 in light blue, homes are now a significant percent of over 500,000. Again, our average sale price has moved to 560,000. Ladies and gentlemen, there's a phrase out there. It sounds something like this. You take a household unit in Maricopa County at the beginning of 2022, combine all incomes, approximately 70% of those household units could afford a median sized home, which was just over $400,000. They're anticipating by the beginning of 2023 that is going to go from somewhere in the 70 percentile into the 50 percentile. And that, ladies and gentlemen, by January of 2023, they're anticipating that will go from 50 down to the 30, somewhere in the 30 percentile. That just this visual graph you're looking at here also is going to have an impact on home ownership in Maricopa County. We're going to begin to price certain segments of that market out of home ownership. And quick data point there, just a great visual. Sarah, please. So just some, for the people who just like raw numbers, I like to see trends here. What I'd like you to look across the very top line, total actives in ARMLS at the time of this on the first was 4,549. That was every active home listed in Maricopa County, or I'm sorry, in ARMLS. But as you look at the second line, total actives in Maricopa County, condos, patio homes, single family homes, just 3,308. As you look down to the line pending, you're going to see a surge. In fact, a significant surge, 6,701 pending homes. That's going to have a result in solds at the end of this month. Our solds were up from the month of basically January. Not quite what we did in December at 9310, but we're going to have a strong finish in March. March is traditionally a very, very busy month for us in the real estate world. I think it would be even busier if we had more homes to choose from. Total solds in single family, 4,813. Boy, there's just not a lot happening there. The fact that we only have currently 2,648 total single families to choose from, and we sold 2,200 more than that last month. What gets put into the market is going under contract. We're seeing more and more 10-day close or 15-day close. The market is moving massively fast. Sarah? So great visual here. This was the yesterday afternoon. We were at 3,088 active homes. Right before I send to this graph, I updated it. 3,088 single family homes. Ladies and gentlemen, if we dip into the 2,900 range sometime this month, that will be our lowest inventory we've had in many, many years. What I'd like you to look at in addition to this graph is the sold to list price ratio graph. You're seeing a red and a blue dotted line. Ladies and gentlemen, that was yesterday afternoon. You're seeing a lift in the average sale price being at over 100%, closer to 101.5. And the blue dotted line median was just starting to lift off of the 100% marker. Sarah, if I could have updated this specific graph this morning, the red average line is now just a fraction below 102%. And the median sale price blue dotted line has lifted to just a fraction below 101. We are surging in over asking price contracts as we speak. And if you look at the hard right on the bottom graph, you're seeing price per square foot in the last 24 months. You're seeing the red line, vertical line average just starting to shoot up higher. Our prices are ascending number one, and number two, the over 100% plus contract price is surging as well. There is demand in our market. Sarah? Okay, so at the time of this printing yesterday, 190, not 180% absorption rate, and 0.52 months of inventory. That's all we have, just over 2 weeks. That includes everything from $100 to $15 million. We have just over 2 weeks of inventory in all of Maricopa County. Things are moving quickly. Sarah? Okay, the next 4 graphs here are going to tell a little bit different story about where we are with listings, under contract, sold, and new residential listings. So the good news here is this: what you're looking at on hard right, February 8682. That's the number of new listings that went into the MLS last month. But if you slide over to December of 2020 versus December of 2021, we're looking at almost a mirror image of those two marketplaces. We're looking at some seasonality if there is any kind of normalcy in our market. So that I'm good with that. I'm good with that. Now, the next slide, Sarah, what we're looking at here is the number of active listings. We're pretty much a seasonality of where we were a year ago as well. When we first went under a month's supply of inventory, there was a lot of fear. There was a lot of panic. That has become our new normal, if there is such a thing. And ladies and gentlemen, as a group of realtors and industry professionals, we're working hard to create a path, a strategy, a series of tactics that help sellers sell for top dollar and match up a buyer that is going to perform. And then if that seller does become a buyer, we're working well with getting a strategic plan together to help them leave the current house and get into the second house, and or getting your specific buyer into their very first house. And so we've become not more comfortable, but we've been able to endure, understand, and strategically respond to a low inventory marketplace. Sarah? Under contract, ladies and gentlemen, for the beginning of March, 11,986 under contract. That's just shy of some all-time highs. That is the mark of the moment, and we are getting business done. Sarah? Closed. This again is a little bit of a mirror image of a year ago now, closing at 6236 for the month of February. Closed transactions in Maricopa County. Sarah? Okay, so now I have a couple stories here as we move into time here with about 10 minutes or so left. Once again, Sarah, we have about 18 to 20 cities with their individual summary page. And so the different colored graphs, the blue, green, yellow, red, and purple. So when we look at all of Maricopa County, there's a story here. And the story is, as of March 1st, our active listings are down just 4%. We had about the same number of active listings this time a year ago. Our solds are down 5%. That's a true story. Ladies and gentlemen, different people are saying different things, that the national real estate economy went up about between 15 and 16% for the year. What this graph is saying, in all of Maricopa County aggregated together, we've been up 29% from March of last year to this year. That is definitely above average, and it doesn't appear to be slowing down. It just doesn't. So we're at a 29% median sale price lift. And I'm gonna put a twist in this in a second. The other thing that's important to know is our month of supply is up by 1%, and yet we still only have 0.52 or just over 2 weeks of inventory. Those are all true statements. Our marketplace is white hot, vibrant, on fire, however you want to describe it. It takes great strategy, great patience, great communication between the agent and the buyer seller to make things work. There has to be a lot of trust in the marketplace. Part of that trust building is understanding the market of the moment in terms of its numerics. And so this is a true statement, all of Maricopa County. Behind that, Sarah, next slide, please. This are the numbers that prove that. In blue, the 3261 active listings, that's down from 6% where we were a month ago. Sold listings. Again, I point this out a couple times here. This is the third month in a row I pointed this out. Sold listings at 6236 for the month is lower than the next line down, new listings 7347. The fact that we're adding more new listings than we're selling, even though it's just not in this case about 1,000, that's how we can have an absorption rate of 190%. We're selling everything. But ladies and gentlemen, in the months of October, November, December of last year, we were selling more than new listings were coming on, and we burned off whatever little buildup of inventory supply we had. We're back to stacking a little bit more than we're selling right now. What I'd like to point out in the bottom gray between January and February, as you slide to the middle, 2 to 3, 3 to 5, 5 to 7, 700 to $1 million. What you're seeing there is that is sell to list and those STL sell to list price. And as that percent rises between January to February, you're seeing the over asking of prices to list price. More and more homes are doing that. All the way up into the 1 to 3 million. They're at 102.2%. The market is surging at all price points. Sarah, I pulled out a twist, ladies and gentlemen. I put the town of Paradise Valley next. I put that there because, ladies and gentlemen, that's the most affluent zip code in our state. And while we're up 29% there, ladies and gentlemen, the most affluent zip code to be up 29.5% is significant. A year ago, it was 474 in the yellow. It was 474.70 a year ago. It's 614.61 today. Our active listings are down by 43%. And you're looking at that going, why is that? Why is our most affluent zip code just surging? And then boom, out pops this article a couple days ago. Why are the millionaires from all over the country moving this little known Arizona suburb, Paradise Valley? It is a quiet, sought after place in the US market to live. The Ritz-Carlton is winding down. Little trivia there for the Ritz-Carlton, ladies and gentlemen. When they broke ground and started selling their 1,000 square foot, 1 bedroom, 1.5 bath properties, they sold for what I felt was a record setting $1,500 a square foot, $1.5 million for a 1 bedroom, 1.5 bath at the Ritz-Carlton. Ladies and gentlemen, one of our agents was at the luxury tour last Friday. There happened to be 2 properties left at that location, 2 left, and they're now north of $2 million. It is surging, and people are moving to this little known suburb called Paradise Valley. So that median sale price at 614 is a huge lift to all the rest of Maricopa County. So what I did was this, next slide, Sarah. I took Paradise Valley out of the mix. There's 61 cities that we look at when we do this median sale price. And I pulled that out, and it had a 0.5% decrease in the median sale price from 29 down to 28.5. But ladies and gentlemen, what it did by removing Paradise Valley, that one city lowered the median sale price by $6 a square foot across the board. I love the phrase, statistics don't lie and liars use statistics. When we looked at that first graph of all of Maricopa County at $266 a square foot, that's a true statement. But by simply pulling out that most affluent zip code, it brings us down to 260. I just wanted to give you texture. All the micro cities, the primary, the secondary cities, the total of 61, 62 cities that make up the average of Maricopa County, that is a hybrid blend that lands in the 260 to 266 range. Sarah? Okay, so now we're back to our A to T Apache Junction to the end. Sarah, as we wind down today, I'll have you rifle through this. I'm going to have you stop right there in Buckeye. Back up one more to Buckeye. Active listings in Buckeye are up 69%. Ladies and gentlemen, their median sale price is up 31%. How can that be? I'm gonna pause here a little bit longer, Sarah. So number one, this is an area where new home construction is happening, and they're only up by about 70 new homes, 65 new homes from where they were a year ago. But the reason they can get up 69% total is there's new construction happening there. Now, another couple things from the Arizona Regional Board. There are a couple new home builder search sites that are in conversation to be added into ARMLS. It's not done yet, but in the next 90 days, Sarah, excuse me, please know that we will have a couple new alternatives potentially. There's some negotiation happening of where we can go to get information about new home builds. Just know that that's something that the board is working on. Again, here, Buckeyes up 31% and actives are up 69%. Sarah? It's stopping at Carefree. I want to pause here as well. Active listings are down 57% and home prices are up 32%. Ladies and gentlemen, Richard is currently the CEO of Zillow. The previous CEO who stepped down a couple of years ago, 3 years ago now, Spencer, went out and created a company called Picasso, P-A-C-A-S-O or S-S-O, Picasso. It's going to be a real estate brokerage. A little data point there, they have now joined the Arizona Regional MLS, that's public knowledge. But what Picasso was going to do is think of timeshares on steroids. What they'd like to do is own super luxury homes in various marketplaces, any of the water areas, big cities. And instead of coming in and buying a 20, 30, 50, $100 million home, if that becomes a timeshare on steroids and you can own a part of that, that will be something that is a unique, affluent, sought after piece. Well, ladies and gentlemen, Picasso has come to town. It's part of the MLS and their first luxury property has been identified in Carefree. Just a data point there. Sarah? As you move to Cave Creek, it too is up 38%, $336 average sale price per square foot. Just 2 months or 2 weeks of supply there. Sarah? Chandler, pause here for a second. Sarah, 32%. Again, we know we've got a lot of Intel construction and new chip manufacturing happening there. Quality of life, jobs, education, infrastructure in schools and freeways, it's all happening there. And it's a good life and it's a good work area in our metro. Sarah? Fountain Hills. Fountain Hills is catching a ripple effect from Scottsdale. Scottsdale has gone from about 8-9 months ago, their average sale price was $935. Today it's $1,013,000 average sale price in Scottsdale. And now a more affordable alternative has become Fountain Hills at $326.88 a square foot. Sarah? Gilbert, perfect, 32% appreciation in Gilbert. That's fantastic. Sarah? 31% in Glendale. Again, spring training's coming. Ladies and gentlemen, let's pause and just think about insights coming to our marketplace. We had a phenomenal Barrett-Jackson. We had a great Phoenix Open with a hole-in-one on 16. Ladies and gentlemen, we're getting ready for, well, hopefully for some spring training, but know that a year from now, we'll still have Barrett-Jackson, we'll still have the Phoenix Open, and we'll be just completing the Super Bowl in Arizona about a year from now. Our whole metro is going to be on a national stage for the next 12 months. And we are just in a good place and a good time to be in the business of real estate. Sarah? Gold Canyon, again, 29% appreciation. Sarah? Goodyear, pause here. Mean sale price up 31%. Actives are up 25%. This has become a very high quality of life. And this is another support community into Luke Air Force Bases, which is on significant expansion, going to be adding north of 100 new F-35 jets in the coming years. Sarah? Levine active listings are up 55%. We know where that freeway is going around South Mountain. Levine is a great place to be living if you need to go north on the 101 loop up towards Glendale, Peoria, or west out to Buckeye, or into the interior into Metro Phoenix. And then we know where that freeway is looping around South Mountain. Levine has been growing nicely. Sarah? Litchfield Park, again, there's a lot of energy there, building a new downtown kind of experience like a downtown Gilbert or an old town Scottsdale, and prices are starting to go up there as well. Town of Maricopa County. Again, they have room to build active listings. This is the highest percent of increased active listings, 132% increase. They can build new homes. Sarah, let's wind it down there in terms of the rest of the cities, those are the ones that were most important to talk about. As we move through, I added Phoenix, and as we get to Scottsdale at the end, I did the same thing with Scottsdale, just to give the background knowledge of why Scottsdale is doing what it's doing. I hope this information is helpful. Please know that we're privileged to be in business with your company, Landmark, and the title company, and you guys always do a great job. The last few slides here at the very, very back are just some commentary of other one-off things that I think people would like to know. That's all I have for today, Miss Sarah.
Thank you, Scott. That was great. And for those of you that are on, please know that, or that are going to watch this recording later, we do have a copy of these slides available for you as well. And we can do even one better. We can go ahead and brand any of these city slides to you so that you are specifically utilizing the information for the areas that you work, and you are the person in the know. So once again, Scott, thank you so much. This is great stuff too. You guys are going to want a copy of these slides here at the end, for coming on today and for giving us all the insight. This is crazy how things are changing just in such a rapid pace. So
it's my pleasure. It's a pleasure to provide this information to your people, and it's a pleasure to be in business with your organization. You guys do an amazing job.
Thank you. Thank you, Scott. Enjoy your meeting. Thank you, everybody, for hopping on today. Please let us know if you have any questions, or if there's anything that you would like to see us cover in our once a month Market Insights. So as always, thank you to Scott Kiburz for coming on, and thank you to Landmark Title for allowing us to bring you Marketing Insight every Thursday morning once a month, every month, Thursday morning at 9:30, first Thursday of the month. Please think of us on your next contract. We love working with you. We love working with Scott. We have 7 offices across the valley, as well as one in Prescott, to service all of your escrow and title needs. Y'all have an amazing Thursday, and happy March.
Bye now.